So the difference between these, of course, is the oil market. So we can obviously start to recognize that there's an oil difference from copper prices. Real yields nowhere near as bullish, and that's obviously started to open up a very, very interesting commodity spread. When we look at the dollar, you can see that the dollar had already suggested the idea of higher real yields, or the real yields had suggested the idea of a lower dollar. So obviously when the dollar started to catch a bid here, well, we obviously have got our answer about which one's moving. The dollar's going back up again, even with low real yields. And that's what we're trying to look for. We're trying to now look at this and say, well, if the dollar's going back up, there's a chance that real yields will be rising. And then obviously when real yields and the oil price and the copper price are kind of holding into this bracket area here, now we're kind of in a rotational phase. You can see now we're in a rotational phase. But what happened at the very top edge here? The dollar got overpriced on a spike, didn't it? You see it? The dollar got overpriced on the spike. You can see the dollar just ran a lot of stops, gobbled up all the stops, gave us a brilliant opportunity to sell dollars, buy pounds again. And that's all we did. We sold dollars, bought pounds again into the stops. The euro did the same. And we've had a very, very fast money response to that strong upside move on the dollar. Going back to the storyline again here, you can see how much that trade stands out. It's absolutely a massive opportunity, isn't it? Absolutely massive. So what else could you look at? Well, of course, the gold makes a lot of sense. When we're looking at gold, the first thing we could probably have recognized was that gold was agreeing with the real yields in the early stages. There was a bit of a divergence starting to happen here at 8:30 this morning. The gold makes a higher high, the real yield starts diverging, the oil real yield does diverge in line with the dollar starting to rise. So that's going to be your sell on gold at 8 o'clock this morning. If we zoom in a little bit at 8 o'clock, you'll see what I'm looking for here. You'll see that's very, very easy to spot. I'll take the copper off for a second so you can see it against oil and dollars. So you can see that that black line is making a lower low. That's a top edge on gold. Brilliant opportunity to absolutely kill gold on the short side with a very, very punchy looking dollar in the background. And that's going to get you into that long trade. Now remember, you could be looking at this and saying, okay, so this is 1 over gold. Remember, gold itself is overpriced at this stage. The dollar is dropping off a little bit. Remember, that's what we're looking at. The idea of the gold and the dollar and the hedging and all that kind of stuff, we still have to remember that that's part of our ideas, that's part of our process. But that turned out to be a good gold trade. That sell there was very, very, very profitable. Since then, one of the things that starts to stand out on gold, of course, is these low prices here. You start to see those low prices at 10 o'clock. You start saying, there's a deal. I could buy some gold there at around about 1780s. Managed to make $600 there. That's nice. 600 bucks. The gold makes another lower low here. That's at 10 past 11. And that's another opportunity. That's 1780s. That makes another 600 bucks. And obviously gold started to get a little bit exposed down in this area. Now, it would have been brilliant if you could have sold gold into that little phase there. That would have been sensational. Interestingly enough, that's where Max did take the sell. Max came in before the prior high got taken out, and we managed to get that. We managed to get that sell coming away from that area, which is really, really nice of a Max trade just there. Now, there doesn't seem to be a gold trade setting up just now. The gold is about fair value just now against real yields and against the dollar, so I don't see a gold trade just yet. The only trade that looks a little bit cheap is the dollar, of course, but bearing in mind that the dollar, whilst it looks cheap on that micro scale, it's actually very expensive on the macro, so it's not getting my attention at this point. We might still see some dollar selling. Make sense? Some comments coming out of Fed's Kaplan, guys, just causing a bit of a market commotion there, a little bit of a spike in the markets. Bond prices have sold off a little bit, spiking in the bonds. You can see bonds dropping off here as well. So just a couple of throwaway comments from Kaplan. Good trade for anybody, by the way, that was in my classroom this morning when we were talking about bonds. Good we trade there for sell side business because we had the green line was overpriced, which suggested, of course, that bonds may even have been underpriced. But because of the euro dollar and because of the dollar, the DAX FTSE, we had a great read on the short bond.